Dear students, today we are going to study the balance sheet of a non-trading concern. At the very outset, we can say the balance sheet of a non-trading concern is similar to that of a trading concern, that is a sole proprietorship concern. That is, balance sheet is prepared on a particular date, that is on the closing date of the financial year. All the assets and liabilities of a non-trading concern is written on the basis of liquidity. That is, most liquid asset is written as the first item on the asset side, that is on the right hand side of the balance sheet, and the immediately payable liability is written as the first item on the liability side of the balance sheet, that is on the left hand side of the balance sheet. So we can say the liability side of the balance sheet and asset side of the balance sheet is written on permanency basis like a non-trading concern, like a trading concern, like a partnership concern, and the items of assets and liabilities shown in the balance sheet of non-trading concern will be little bit different from that of a trading concern. We shall go through now it. The first item to be shown on the liability side of the balance sheet of a non-trading concern is outstanding liabilities, and the second item is income received in advance like a subscription, and the third item is bank overdraft, if any, and the next item is special fund, and the last item is capital fund. With regard to capital fund, if capital amount or capital fund is not given, we have to find out capital fund by preparing a statement of affairs based on the information available. That statement of affairs is prepared on the opening date, and the statement of affairs is written, the amount of statement of affairs is written, and to that we add if the balance of income and a expenditure account is surplus, and we deduct the balance of income and expenditure account if it is deficit. So these are the items to be written on the liability side of the balance sheet. And the next is how asset side is written. The asset side of the non-trading concern is written by showing the first item as cash in hand, and the next is cash at bank. One thing to be remembered is that when there is bank overdraft, there will not be cash at bank. When there is a balance of cash at bank, there will not be bank overdraft. That is only either cash at bank will be there or bank overdraft will be there. And the next item is repaid expenses, that is expenses paid in advance. And the next is accrued income accrued but not received. And the next is current assets, and next is investments, short-term investments of course, and next is fixed assets. This is the method by which a balance sheet of a non-trading concern is prepared. And one thing to be remembered is that when balance sheet of a non-trading concern is prepared, if the capital fund is not given, the capital fund of such a non-trading concern must be found out by preparing a statement of affairs on the opening date of the balance sheet. Here balance sheet is prepared on the closing date. For finding out capital fund, statement of affairs should be prepared. Statement of affairs is prepared on the opening date of that particular financial year. When these two amount columns are totaled, these two amounts columns should be the same. And that is how the balance sheet of a non-trading concern is prepared, and there may be some adjustments with regard to current assets, with regard to fixed assets, that is depreciation, etc. That adjustments should also be done. Then we may total the two sides of balance sheet, that is liability side of the balance sheet and asset side of the balance sheet. The two columns should be one and the same. Thank you.